year of 2020. It's been a crazy ride, I'm telling you. I'm sure we can all agree on that. Especially in the stock market. It went from 100 to 0 real quick. When the pandemic became a reality and the markets caught wind of it, from February 24th all the way to March 23rd, almost every single day was a red day. Companies like Apple, Facebook, Amazon, and Microsoft lost roughly 30% of their value. The S&P 500, for those of you guys who don't know, that's basically a stock comprised of the top 500 companies in the US. That stock lost about 35% of its value. And that's very bad. But everything flipped on the last week of March. The stock market went crazy after the first stimulus package was confirmed and signed into law. Jerome Powell, aka Papa Powell, set the money printer on maximum speed. And just like that, trillions, yes, with a T, trillions of dollars created out of thin air was injected into the economy. Don't worry, Americans, I got you guys. In an effort to stop the economy from completely getting wrecked, the government set up different programs that are still in effect today, including the unemployment boost, PPP loans to businesses, rent relief to tenants who are behind on rent or utilities, and a free $1,200, $600, and $1,400 checks to Americans and their children. I mean, isn't that wild? The Fed lowered interest rates to almost zero to incentivize banks to make more loans and get more money circulating in the economy. Obviously, the American people were in dire need of relief, and I support the government's decision to provide it. We really needed that relief package released. Even though they took their sweet time, it still came through. But surely you have to ask yourself, can we just print a couple $1 trillion out of thin air and expect no problems as a result? Well, after March, the Federal Reserve's announcement to lower interest rates and the passing of the relief bill, the stock market became an infinite money glitch. Almost everything was going up. It was the literal opposite of the first 3 months of absolute pain and misery. From the S&P 500 bottom of roughly $220 to today, as of the making of this video, it's sitting at an all-time high of $440. That's almost 100% return on your investment. Even if you started investing at the absolute peak of roughly $340 before everything in the market started free falling and diamond handed your way through 2020, you would still be up today by almost 30%. When things go up in the stock market very fast with no fundamentally valid reason, that's called a bubble. And the 2020 stock market bubble was largely due to Congress making steamy checks rain on everyone and paying people more than they were from going to work in the first place. And the low borrowing cost was the cherry on top. This led to people pour loads of cash into the markets, pumping basically anything up. So, people are getting free money, earning more than they were while working, and getting crazy gains in the stock market, and getting their rents taken care of. What could possibly go wrong? Inflation. For those of you who need a refresher, inflation is basically when your money loses value. The more of something there is, the less valuable it becomes. And why is inflation bad, you ask? Well, it basically means that because there's so much money flooding the economy, the things you usually buy suddenly become more expensive. And what's even worse is you aren't making any more money than you were making yesterday. Eventually, all the free money that the government has been distributing will end. And that in turn will put people in a situation where the cost of living is higher, their wages are either the same or they lost their job altogether and are depending on the government stimulus. And this is going to create fear, uncertainty, and doubt in the markets. And whenever there's FUD, people get scared and start hoarding cash, therefore taking profits on their stocks and other securities. And when enough people start doing that, the stock market will quickly dip, leading more people to sell. And it becomes this vicious cycle, essentially putting us back in the dilemma we were in before. This is a phenomenon that is extremely hard to predict because of the many variables that are at play. Crashes happen all the time, and the market always finds its way back to newer highs than before. We have seen astronomical gains in securities like crypto, tech stocks, EVs, and others. But as of lately, we've seen rising cases in COVID, and higher than expected inflation rates are being reported. The eviction moratorium, unemployment boosts are coming to an end on September 30. And just like I can't tell you how things will unfold, nobody else can. Nobody can predict the future. We could possibly see another extension in the stimulus programs, another bill getting passed by Congress, another lockdown, more layoffs, who knows? A lot of companies already indebted themselves during the initial lockdown to stay afloat. Another economic impact like this might be the nail in the coffin for them. But enough doom and gloom. Just like the stock market, trying to predict these things is just mere speculation, and all we can do is make an educated guess and act accordingly.
But Junior, I understand that things may or may not get bad. What should I do? Should I sell my stocks just in case? Should I hold in hopes of everything rebounding higher than before? Or wait, should I sell and buy back when everything is lower to make even more money?
Alright. Listen carefully. I'll tell you the secret to survive and thrive no matter if things get bad or just keeps going to the moon. Are you ready? So the secret is do absolutely nothing. That's right, you heard me right. The best way through this is to do nothing. Because you see, market trends are cyclical. This isn't the first crisis and it will not be the last. The stock market has crashed before and has rebounded to higher highs every single time. Don't take my word for it, just look at the data. 1929, 1987, 2000, the 2008 to 2009 crisis. We've seen the market drop very quickly but then rebound even higher than before in each of these occasions. So the worst thing that you could do is try to time the market by selling out and buying back later at the bottom. This method requires you to be right twice, selling before everything drops, which you can't predict, and buying back at the bottom, which you also can't determine. Now, I don't know about you, but I'm pretty sure you're not going to get the right answer twice in a row in this scenario. When you cash out of the stock market and wait for things to get better, the market won't wait for you to buy back in. No. The train will keep going without you, and then you will wish you hadn't sold in the first place. So if you want to take it a step further, just keep buying consistently no matter what noise is going on outside or in the news. Unless it's truly the end of the world, well, even then there would be no point because money would probably be meaningless. People would just steal everything and just do what they want before meeting their doom. But besides that, just keep buying constantly in the market. On average, the S&P 500 has yielded an average of 7% yearly adjusted for inflation since 1926. That's almost 100 years of data. I made this mistake back in February when it just felt like things will never recover. I had Tesla stock at 300 before the split. I had Nvidia, Apple, and a whole bunch of other stocks that I decided to cash out of to save my skin. By selling out due to fear, doubt, and uncertainty, it cost me several tens of thousands of dollars. I know it hurts, but I did learn my lesson, and hopefully you don't have to make the same. If you give the stock market enough time, it will reward you. And if you just take one thing away from this video, I just want it to be just that. Do not panic sell or impulse buy. It never ends well. During a crash or a bubble, your number one priority is your job or business. Assets will always have fluctuating values, so make sure to keep your job and that income flowing in. Make sure you have enough money to survive through tough times if you were to get laid off or if your business closes down for an extended period of time. Preferably 3 to 6 months of an emergency fund. How much money should that be? Well, just enough to compensate for your monthly budget. You're in luck because I actually made a video that'll go through step by step on how to determine that number. You'll find it in the description below. That's right below the subscribe button and the like button. But that is all I have for you guys today. Thank you so much for watching, and I will see you guys in the next video. Bye bye.